Welcome to the TBF Training channel, and in today's video we're going to be talking about the Fibonacci retracement. So if you're joining us for the first time, we'd like you to hit that like button and subscribe, and if you're not, we'd also like you to hit that right button. So if that's done, let's jump right into this video. Now, what is a Fibonacci retracement, or what is Fibonacci retracement? I don't really have any fancy definition for the Fibonacci retracement, but what I can tell you guys is that the Fibonacci retracement is a very dope tool that helps you to predict the next possible pullback or the next momentum move in a trending market. That is, the Fibonacci retracement can actually help you to predict the next pullback, that is when the price is coming down or when the price is retracing. That's why the name is Fibonacci retracement. It can help you to get the next retracement, and if the next retracement has already occurred, it can also help you to get the next momentum move. Now we're going to show you all this in a sec. So if you want to access the Fibonacci retracement, just come to the third section right here and click this. Then you're going to see Fib retracement. Then you can just click on this star to keep it right here. So now, if I click on a Fibonacci retracement, you're going to see something like this. Now, there are different types of Fibonacci retracement. There are several types. In fact, I actually have a lot in my filter right here. This is the Fibonacci retracement I learned from a guy named Swagger C. And I also learned some few other retracements. I have this one from a guy called Banga G. So there are different type of Fibonacci retracement, but they do almost the same thing. But I'll prefer this one I learned from Swagger. So if you want to copy this, you can just pause this video and copy this stats right away. Now, as you can see, the Fibonacci retracement will help you to get, if let's say this is a trending market, the market is trending. The Fibonacci retracement will help you to get the next possible pullback. The next pullback, then it will give you, it will also able to predict the next momentum move. Now, as you can see, we're going to give you examples on the live market very soon. But as you can see, this is a trending market. So when the price got to this level, yeah, we draw our Fibonacci retracement. Then the Fibonacci retracement will able to predict the next possible pullback. Then I've been saying the same thing over and over. So let's jump into the charts. Now let's look at this. This is AUD JPY. Now, before you can use the Fibonacci retracement, you have to understand trend and structure. Although structure is part of trend, but there's a reason why I separated them. And the reason is because you have to understand the trend. You have to understand when the market is trending, and you also have to understand when there is a break of structure. So the reason being is that when you don't understand when there's a break of structure, you're going to end up using Fibonacci retracement at the wrong times. You're going to end up losing money. And if you don't understand trend, you might use Fibonacci retracement in a shopping market or in a consolidation, and Fibonacci retracement is really used best in a trending market. So let's look at this now. This is obviously an uptrend, but this little candle here just broke this zone. Like, price is supposed to be in an uptrend like this. Price is supposed to be, let's say, from, let me start from here. Then price came down. But price didn't break this high, so this uptrend hasn't continued. So I won't call this sorry. I'm very sorry. Let me start again. To this high, price didn't break this high, so this is going to be the retracement. This is the lowest low, and this is going to be the new high, because this high broke this high right here. So this is going to be the new low, then price new high, price broke the low. Or you could just use a moving average. Once the price starts trading below the moving average, then it tells you that there's a break of structure or you're in a downtrend. As you can see, the price was trading above the moving average, and that indicated that we're in an uptrend. And now that the price is below the moving average, it means that we're about to start a downtrend. Now, how are we going to confirm that this is a downtrend? We need a retracement, a pullback down to the We need a pullback up here to confirm that this is a downtrend. Now, how are we going to use Fibonacci retracement here? We first have to see a pullback to confirm that this is a downtrend. Now, that's why I say you have to understand trend. If you just pull out your Fibonacci and you did something like, that this is an uptrend, now this still looks like an uptrend because this downtrend hasn't been confirmed by pullback and that momentum move. I don't know if you get what I'm saying. And you just pull out your Fibonacci, you could just maybe buy around here and you can end up losing money. So you have to understand what trend actually is. Now let's get our pullback. Now you can see that. Okay, let's say that's enough. Price is touching the EMA now. Now let's bring out our Fibonacci retracement. Now we're going to draw the Fibonacci retracement from the high, from the highest high to the lowest lows. Then, very sorry. We're going to draw our Fibonacci retracement from the highest high to the lowest low. Now, this retracement, what would I be expecting? Since I've already drawn my retracement, my Fibonacci retracement. Now, let me zoom in a little bit. We're going to be expecting price to retrace from these two red lines. I actually color coded everything here. So I'm expecting price to retrace from these two red lines, and that's the 61.8% and the 50%. So this zone, I'll be expecting price to get retrace from this zone. Now the price has got into this one and it broke it a little bit. What will I be expecting? I'll be expecting a red candle as an entry candle. Now, I just said I'll be expecting price to retrace from these two zones and the price broke a little bit. Why should I still be looking to take the trade? And the reason why I'll still be looking to take the trade is because if I draw an horizontal line right here, you see that price is still inside my trading zone. So even though I don't draw it out, I can still see that it is still price is still in the trading zone. That's number one. Number two, the price is still retesting the 50 EMA and the price is still within, it hasn't broken the zone like that. So because if I adjusted this a little bit, if I adjusted this to the top, you can see that it's still inside the zone. So it's not really a big deal. So let's see what happens next. Boom, we got a red candle, and the red candle is still below the 50 EMA. So that's a very good entry reason for me. So what will I do now? You bring out this. Now your stop loss, you could put your stop loss above this zone. You could put your stop loss above the 78.6% of the Fibonacci retracement, or you can make it 180 arrow. No matter what you do, it's still going, as long as your stop loss is something that you have practiced multiple times and still makes you profitable over time. And it's not this kind of stop loss that will just get hit by the market before the market continues. Anything you do is okay. Now, there are two golden lines here. The golden lines here are meant for take profit, and that is the minus 27% and the minus 61%. Now, the minus 27% is my Fibonacci line that must, like, it is a zone that I expect to be hit. It's a zone that I expect price to always get to indefinitely, no matter what. Price always gets to the minus 27% line or zone, but price sometimes might get to the minus 61%. It's actually varies, so it might actually get there sometimes and it might not. But the minus 27%, it is actually very compulsory for the price. I'm saying that if I'm dictating for the price, but what I mean is that if the price is if the price is actually trending, I don't mean if the price does something like this. The price could do, market could do something like this and continue an uptrend. But I mean, what I'm trying to say is that if the price is actually continuing in that trend, the price must definitely hit the minus 27%. In fact, most of the times it always hits the minus 27%. And if price is trending a lot, it sometimes gets to the 61%. Now let's check out what happens. As you can see, price go to a minus 27%. and it also broke our minus 61%. So usually I use the minus 27% as my take profit one and the minus 61% as my take profit two. So let's check out another example on the card JPY. Now, as you can see on the card JPY, but this market has been ranging for a while, but I think I'll be looking on taking, although this is cherry picked, so I already know what is going to happen. That's the reason why I'll be taking this trade, because if I would actually take this trade in a live market, I wouldn't go past this zone because this market is ranging. But I already know what is going to happen, and I know it's going to break the range. So let's just see how the Fibonacci retracement can help in a situation like this. Now, since this is an uptrend, but if you zoom out really well, you're going to see that this is an uptrend. Price is doing something like this. Then the whole of this range is actually just a pullback. Then before the price continue going, but let's just look at it this way. The price broke this high. Now, let's say price broke this high and it's retesting. So there's a pullback already. So there's a retracement, Fibonacci retracement. We use it to get the next possible momentum move after a retracement. Hope you guys are getting it. So if this for an uptrend, in a downtrend, we say we are going to draw the Fibonacci from the highest high to the lowest low. But in the uptrend is going to be the direct opposite. So we're going to draw the Fibonacci retracement from the lowest low to the highest high. Now, it depends on you. I would advise you to actually backtest this strategy and see whatever works for you better. So some people draw from the close, of the lowest low to the um close or the open of the highest high. So I just try to draw mine to the highest high and from the lowest low to the highest high. So just backtest, and whichever works for you, you use it. Now I think this is set already. What are we expecting? We're expecting price to get into our 50% and 61.8% zone. And if price get there, we're expecting a change of color candle. Since this is an uptrend, we're expecting a candle that shows us buying pressure, or prime that shows us buying pressure. And again, if you look at it just like the previous, although this indicator doesn't really mean anything because this market is ranging, and in a ranging market, the moving average is actually a little bit useless. But let's just see how this goes out. We have gotten a break of this structure. We're in an uptrend, and we've gotten a change of color candle that shows us buying pressure. So we're going to put this here. Your stop loss should be wherever you want it to be. Then we're going to have this. This is going to be our take profit one and our take profit two. Let's see how this goes. Damn. As you can see, price has gotten to our take profit. Oh, this is very slow. Price has gotten our take profit one, and I think it's going to eventually get to our take profit two. But this is just for the this is just to show you guys that this is actually very, very profitable. I'm very, very sorry for making this a little bit long. So let's look at another example on the GBP JPY. Price is in an uptrend, but if you look at it closely, you're going to see something like this. If I draw my horizontal line right here, and here, you see that price is planning on doing something. Price is planning on having a deep pullback. So very soon I'm going to have a video on the three different types of pullbacks. So as you can see, that price is planning on having a deep pullback down to this zone. And when it gets to this zone, it might probably continue its uptrend or not. So, but the fact is that the GBP JPY is in an uptrend, but the price is planning on having a deep pullback. At least that's what you should be expecting. And if you're looking at this, let's say I was planning to trade or to sell this normally, looking at this the inverted hammer. If I even ignore the inverted hammer, looking at this engulfing candles, enough is enough entry reason for me to sell down to this zone. Now, but since we are going to be using the Fibonacci retracement, how are we going to use the Fibonacci retracement? Since this is going to be a downtrend, we are going to draw the Fibonacci retracement from the highest high to the lowest low. From the highest high to the lowest low. Now, let's see what happens. Then, now price has gotten, in fact, price smashed our first take profit without even getting to the. Let me just pause this. As I've said, this is a deep pullback. So this since this is still an uptrend, a deep pullback is still, the trend is still going to continue. But that's not what I'm talking about now. Price smashed our first take profit. In fact, if you look at it closely, you see that price also smashed the second take profit, but the price didn't get to our entry zones. So what I'm trying to show in this example is that if you are using the Fibonacci retracement, do not depend solely on the Fibonacci retracement, and that's because you have to also look at some. No, I said something even before I drew the retracement. I said if I want to trade this normally, I would have entered on this inverted hammer or on this engulfing candle. But now imagine I just traded this with respect to only the Fibonacci retracement. I would have lost this very good trade. Now, the reason why I'm showing this is because most people, after learning a new strategy or they learned how to use a new object or a new tool, a new trading tool, they tend to rely solely on that trading tool and forget every other thing they have learned. Now, after the Fibonacci retracement, some people might stop using the support and resistance. That's why I have to even draw the support and resistance in this example. Some people might stop using the support and resistance. They might stop using other things that they have been using before, just thinking that the Fibonacci retracement will help them to get most. In fact, the Fibonacci retracement is not all that profitable. Let me show you guys an example. Now, this is the New Zealand Swiss. Now, let's check out. This is an uptrend, obviously. Price just broke this high. And let me draw out my trading zones. This is my zone. And what will I be expecting price to get to? I think I'll be expecting price to get to this zone right here. Now, I was expecting price to get to that zone right here. So let me pull out my Fibonacci from the lowest low to the highest high. In fact, the Fibonacci is telling me that I can even take another profit from this place. So now let me respect the Fibonacci retracement and take my first profit here, not in my zone. Let me take my first profit here and my second profit. Sorry. Let me take my first profit here and my second profit here. Now, we are gonna need price to get into this zone. Let's see if price eventually gets into the zone. Okay, price got to the zone, and there is a green candle. That's all I need to enter the to place this trade. That's all I need. Now, the green candle. Let me see. My stop loss is below the 78.6%, and my take profit is just right here. That's the 1 to 5 risk to reward ratio. That's dope. Now let's play and see what happens. Now, we're very close to our take profit, and let me speed this up a little bit. As you can see, we got stopped out. We're very close to our take profit. This is one of the most annoying types of trade. We got stopped out, and this is to show you that the Fibonacci retracement is a very dope tool to use to trade the forex markets. But just like every other forex price action pattern, every other forex strategy, every other indicator, every other tools, there's nothing in the forex market that is 100% profitable. So you still have to build a strategy around the Fibonacci retracement to be reasonably profitable. Now, before to end this video, I'm going to give you guys something. I'm going to give you guys a strategy on the Fibonacci retracement. And I'm also going to show you guys a trade that we entered, I think on Thursday or Friday, using the Fibonacci retracement. Now let's get to the strategy. Now, it's very, very simple. The first thing you have to do is to know the trend. Now, if you check out the first example that we had, on AUDJPY, the first thing that we did was we knew the trend. And since it was a breakup structure, the trend was changing from an uptrend to a downtrend. So we knew the trend. Now, the next thing we're going to do is to wait for a pullback into the 61.8 and the 50% fib level. Now, we're going to wait for a pullback. What did we do? We waited for a pullback into the 61.8 and the 50%. Now, the reason why I wasn't too strict with the 51.8 and 60%, but let me add this to the rules. The price can break the 61.8 and the 50%, but the price must not break the 78. Sorry, the price must not break the 100% level. I'll explain why very shortly. Now, price must not break the 100% fib level. Now, and the reason is because price can get all the way and play around inside. Although I said I don't like price breaking above it earlier, but price can actually play around all this, but price must not break this 100% fib level. And the reason is because if price breaks the 100% fib level, let's say price comes from here, that is telling us that there is already a break of structure and the price is planning on, like, the uptrend is going to continue. But if the price gets to the 100%, this is telling us that, and the price doesn't break it. This is telling us that the price is market is just having a deep pullback, and once you have a deep pullback, price market can still continue, just like what we had in the GPP JPY. As you can see, this price came from all the way down here to this place, then continue up. That's what we call a deep pullback. So, but price can play inside the 61.8%, the 78.6%, and even inside the 100%, but it mustn't break it. But personally, I prefer, that's why I even color coded this as red. I prefer the price to be very close to or in between the 61.8 and 50% fib level. Now, the next thing is the entry reason. I actually leave this place open. Use any entry reason of your choice. I can't impose an entry reason on you because you might be used to an entry reason. But personally, all I need to see is a change in the pressure, in the change in the pressure. Yes, that is, if we're in an uptrend and there's a pullback, all I need to see is a buying pressure. That is a green candle. And for this example, we're in a downtrend and this is a pullback. All I need to see is a red candle as my entry reason. And you can also wait for a price action pattern. If you look at this closely, you can see that there was a double tops that formed right here. Let me move this to make it very visible. Let me also remove this. Now, if you look at it closely, you find out that there's a double tops that formed right here. Top one, neckline, top two. Then this red candle will be your entry reason. Then you just enter right here. Stop loss will be above, something like this, and you're still going to make money. So Forex is not about when you enter the market, it's just about how much you make at the end of everything. That's simple as that. So, and your take profit should be in the minus 25% and minus 61% level. That's the minus 20, this minus 27, sorry, minus 27% and minus 61%. Or you could just put your take profit in the next trading structure, whatever you like. So now let's look at a trade that we enter last week or this week using the Fibonacci. Now, as you can see, this is a trade that we entered on the EUR GBP, the Euro Pounds. And as you can see, price is definitely, let's say obviously, in a downtrend. This is a downpour, so price is in a downtrend, and there was a pullback. So once we got the pullback, we drew our Fibonacci retracement from the highest high to the lowest, or from the lowest low to the highest high, because this is a downtrend. Now, after drawing that, the price got into the 61.8% and the 50% fib level. And once we got into that place, that's what we're going to be looking for. That's what price must get to the 61.8. Price should get to the 61.8 and 50% fib level. Price must not break the 100% fib level. Price didn't break the 100% fib level. And after that, we're going to be looking for an entry raising. Now, what was my entry raising? It was very, very simple. My entry raising was actually this red candle. As you can see, this red candle was actually my entry raising. Then we entered on the red candle, and as you can see, the price is actually moving. Now, one advantage of the Fibonacci retracement in this trade, you see the advantage of Fibonacci retracement in this trade is that the Euro GBP is at its lowest low. Like, if I go, let me put this at a weekly chart, and if you go back, you find that the Euro GBP is at its lowest low. So there isn't any structure to say that, okay, I want to take there's no any, this is the lowest low. So the advantage is that there isn't any structure to say that you want to take your take profit from. That is, when I want to take my profit now, there's no any structure like that I can draw there's no way I can do something like this. I can't do something like this. There's no any there's no any previous price that I can actually put my structure at. So, but with the fib level, if the price continues to go down, although there will be a pullback very soon, as you can see in the daily time frame, but if the price continues to go down or to sell, it means that it will definitely get to this zone. That's the major reason why I used the fib level in this trade. Even though I'll just go to the nearest structure and place a support, and I'll be taking my take profit in the support. But there is not any support. There isn't any support in the Euro GBP. So that's why I used the Fibonacci. So tomorrow, or very soon, we're going to be dropping our next week weekly analysis. Let's say tomorrow we're going to be dropping our next week weekly analysis, and I'm going to drop some of the analysis using Fibonacci retracement. So I hope you guys enjoyed this video. If you did,
I grew up in a place where they told